Hey, it's Lon Welsh at Your Castle Real Estate, and I'm being asked a lot about investing in the Denver real estate market. So for most people, getting a rental property is the easiest way to get started. And I always recommend get a property manager so that you're not the one having to find the tenants and take their phone calls. The property manager will deal with all that stuff for you. In this example that you've got on the page here, you've got either a condo or a townhome for, say, $200,000 as our example. That might be a 2-bedroom unit. Maybe it pays $1,500 a month in rent. The prices in Denver have gone up about 6.5% a year in Denver over the last 50 years on average. So I assumed, what if they just went up 5%? You can see that this property is going to be worth a little over $300,000 just by making those little 5% gains every single year over the next decade. That's the top line. The purple line is your debt. You can see that that gets paid off a little bit every single month. And then your gray line is the equity that you've got in the property. And you can see that it goes from $50,000, which is the example down payment. You could do it with less than that, and grows to over $200,000 or almost $200,000. What this doesn't include is the rent cash flow and the tax benefits that you'll enjoy, in addition to the major wealth creation of the property appreciating over time. Something that isn't well discussed or understood by a lot of newer investors is that the way that you generate wealth with investment real estate is the return on investment from the property minus the rate that you're borrowing money from the bank on your mortgage rate. The larger that spread, the more money you're going to make. We go through these concepts in a lot more detail in our classes, and they're available in webinar format for you, but the punchline of it is that the mortgage rates for investors right now are so cheap that you can actually make more money now than you could have like 5 or 6 years ago, because the government is just doing so much to subsidize the mortgages. If you've been thinking about investing in real estate, this would be a particularly good time to do it. You should be able to find that you'll make somewhere in the 16 to 20% per year return after tax on a 5-year hold. If you compare that to the big stock index, the Standard & Poor's 500, you'd probably be more in the range of 7 or 8% after tax. So you can make twice as much investing in rental real estate as you would in the stock market, and that's with an allowance for vacancy, hiring a property manager, and allocating quite a bit for a maintenance reserve, so when something breaks, the money's already saved up for you. It's really pretty exciting, and the more you look into it, the more I think you'll find it to be an attractive alternative for your investing portfolio.